Namaste and welcome to my show Concepts with Karan. I'm Karan Datta and I'm delighted to share with all of you that I have a fantastic CIO on the show today, Ramesh Mantri, the CIO for White Oak's mutual fund business. And White Oak's creating waves in the industry. They've done some remarkable stuff with their PMS business, and I, for one, am really excited about what they're creating on the MF side. So without further delay, let me introduce all of you to Ramesh Mantri. Ramesh, thanks for talking to me today.
Thank you, Karan, for giving me the opportunity to be on this show.
And Ramesh, I want to start immediately with the first question about fund philosophy and the way you all manage money. Because, over the years, I've seen how Prashant's, built portfolios at Goldman, etc. And there's always been something unique about White Oak. So could you share what is truly unique about the way you all manage money, and also what is it that you don't do while managing money?
Sure. See, our investment philosophy is that outsized returns are earned by investing in great business at attractive valuation. So it's the best combination of great business and attractive valuation. First, we filter for great business, and then within the universe of great business, we tend to invest in the most attractively valued businesses. Now, for us, what do we mean by great business? Great business for us have three key fundamental attributes. The first attribute we look for is the business should generate superior returns on capital over incremental capital. Now, typically businesses generate superior returns when either first the industry has to be attractive and the company has to be either a dominant leader, a market leader, or is executing so well that they are gaining market share. So these are the typical characteristics of the superior return generators. And the key phrase here is in the future. See, investing is all about the future. You actually buy future cash flows when you invest. The past is only so much relevant. And in that, it's important to have a structural view of where what kind of returns the business will generate in the future. Some businesses have had a great past. For example, internal combustion engine, has been a phenomenal industry for 100 years.
True.
But it's likely that in the next 3 to 5 years, when you buy your next car, it's more likely to be electric vehicle.
Of course.
So clearly, in a decade or two, internal combustion engine will get disrupted. So we typically don't invest businesses which don't have those ability to generate high returns on capital in the future. The second attribute we look at is business has to be scalable long term. India within the realm of the world is a fast-growing economy. Within that, certain industries grow faster than the whole economy. And within that, certain companies grow faster because either they're gaining market share or they're expanding their scope of activities. They are entering into adjacent spaces and in the way increasing their market. So that is a second important of a great business. And third, you want to see a strong track record of execution in the company. The difference sometimes between great businesses and the mediocre ones is just the quality of execution. For example, in the 90s and 2000s, early 2000s, you had hundreds and thousands of IT services companies. Now, if you look at the top 5 account for 70% of the value, plus of the value created. Now, the difference between the top 5 today and those hundreds is just the quality of execution. And when you have all these, you need adequate governance. Because remember, even if it's a great company, but if the governance is not adequate, you as a minority shareholder will not capture the return. It's like you can't make money off a business partner who is not fair to you. So it's important the corporate governance is adequate. So typically in our portfolios, any company in the market which is below average corporate governance, we deprioritize from our investment universe. So governance is again a necessary condition for you to create long-term value. Once we've identified this universe of great companies, we like to invest with them at attractive valuations. See, we are not in the buy and hold school just for the sake of buy and hold. The purpose of investing is to maximize returns. If buy and hold allows you, you should do it. But many times stocks get expensive and new opportunities emerge. We are open to redeploying and rearranging our portfolio.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.